If there is any refinancing DC, refinancing documentary credit are situations where either the nominated bank or the reimbursing bank is requested by the issuing bank to finance for a further period. The credit may say at site, but the reimbursing bank or the nominated bank will get the money from the issuing bank only at 90 days from a particular event. In other words, the credit might have a 60-day tenor, but the issuing bank might say 60 days is for the beneficiary, but actually issuing bank is willing to pay only 120 days down the line. So the reimbursing bank or the nominated bank will have to refinance, will be getting it refinanced from the reimbursing bank or the nominated bank. The issuing bank will be getting it refinanced from the reimbursing bank or nominated bank for 60 more days, so that the 60-day tenor transaction ultimately becomes a 120-day tenor transaction for the applicant and the issuing bank. So this is refinancing. Maybe in some places this is called a supplier's credit or a buyer's credit also within the credit. When reimbursement is made available by telegraphic transfer, normally a SWIFT message is sent claiming for funds for a compliant presentation. The issuing bank will have to fund the account. Issuing bank may have to fund their own account so that the nominated bank can debit it. Issuing bank may fund their account with the nominated bank. Issuing bank may have to fund their account with the reimbursing bank. The applicant's account might also have to have accounts, and if it is a side transaction, and it is not compulsory because the credit is a independent undertaking of the issuing bank. Applicant is only a party associated with credit, not a party to the credit. So whether the applicant's account is funded or not, issuing bank will have to pay, but most of the time it is paid out of applicant's money. Issuing bank's account with reimbursing bank, applicant's account with issuing bank will have to be remain funded, so that if a telegraphic transfer claim is to be paid, funds are readily available in transferable currency. The collection of charges is one of the areas of concern at the time of effecting settlement, because if charges are payable by the beneficiary, then every party in the chain will detect their own portion of the charges from the proceeds, if any, payable. So we have to decide, or the amendments to the credit may bring about different combinations of charges payable by different parties. We could see a situation where when the credit was issued, all charges are payable by the applicant, and thereafter it was amended that beneficiary bank charges will be payable by beneficiary and applicant charges will be payable by applicant, and thereafter further it was amended that all charges related to the amendment will not be paid by applicant, but being even issuing bank charges for the amendment will have to be paid by the beneficiary, and things like that. So that has to be kept in mind, and total charges payable will have to be calculated and either deducted from the proceeds or claimed from the issuing bank as per the documented credit terms when making a claim. So a $100,000 transaction, by the time it is made, if the charges are payable by the applicant, the claim could be received for 110,000. And if it is chargeable payable by the beneficiary, the ultimate proceeds received by the beneficiary could be only 90,000 out of 100,000, because all these charges by the various banks are added up for different reasons. Now the decision whether to deduct or whether to add has to be made, and accordingly claim will have to be made and paid. The charges that could not be collected by various banks for whatever reason will also have to be reimbursed by the issuing bank as per Article 37 of the UCP, though payable by the beneficiary. Now suppose there is a confirming bank and a confirmation has been added, and confirmation bank charges are due, but no payment has been made by the beneficiary, and presentation was not made to the confirming bank. It was made directly to the issuing bank or by the nominated bank directly to the issuing bank. In such a situation, the confirming bank charges will have to be paid by the issuing bank by deducting from proceeds if payable by beneficiary. In unconfirmed DCs, any negotiation will be with recourse to the beneficiary. This is generally understood. If the DC is not confirmed, the nominated bank has no liability on their own or obligation on their own. And once they decide to act as per nomination, they will just negotiate, but it will be with recourse to beneficiary. In unconfirmed DCs, negotiation will be with recourse to beneficiary. If it is a side transaction, the payment made is without recourse, but in other cases, it will be with recourse. The payment by the nominated bank is on without recourse basis when available with the nominated bank by payment. When the nominated bank pays a by payment LC, it is without recourse. The negotiation will be with recourse, but a side payment will be without recourse. Nominated bank. If complying documents are presented and the bank has agreed to act as per the nomination, the negotiation will be with recourse. When the bank agrees to act as per nomination. If otherwise, it is understood that if it is not confirmed, it will be with recourse. The short-term finance, the discounting of acceptance DC or a prepayment of a deferred payment undertaking or a negotiation is basically a short-term finance, and this short-term finance is recorded as a risk against the beneficiary most of the time, in addition to being treating the issuing bank or the confirming bank as a additional collateral or a backup. Mainly it's a risk against the beneficiary, because this is basically given as a short-term finance for the beneficiary. So these are done with recourse. The nominated bank, if available by payment, reach an agreement with the beneficiary for recourse. Otherwise, it is without recourse. If it is negotiation, it is basically automatically understood that it will be with recourse as long as the recourse agreement is in place. It lists out the terms and conditions. So payment is without recourse, negotiation is with recourse. The nominated bank will have to enter into an agreement separately if they want to change the way the recourse acts or effects. And the nominated bank may pay or negotiate a discrepant presentation, and this discrepant presentation will be negotiated always on with recourse basis, and it will be very little without recourse basis, because based on the formal indemnity. The formal indemnity will be an additional maybe trust receipt or any other undertaking that the bank nominated bank is willing to take, and this negotiation of the discrepant documents is technically outside the documentary credit terms and conditions, or outside the precincts of the UCP. Now this one, reimbursements if any made by the confirming bank is without recourse. Reimbursements made by the issuing bank to nominated bank is without recourse. The payment or settlement of a complying presentation is always without recourse to the presenter. The settlement of a complying presentation is without recourse to the presenter when it is settled by the issuing bank, or if it is by the nominated bank or the nominated confirming bank. That is, acceptance cannot be undone, the payment cannot be reclaimed. This is what we mean by without recourse. When it is made by the issuing bank, or when it is effected by the confirming bank. What? Payment or settlement of what? Of a complying presentation. So when an issuing bank pays, or when a confirming bank pays, it is without recourse. When an issuing bank or confirming bank honors, it is without recourse. That is, such an honor, the deferred payment undertaking or acceptance cannot be undone. The reimbursement made by confirming bank or issuing bank is also without recourse. Only when it is by the nominated negotiating bank, the question of with recourse occurs, provided they have a with recourse agreement, or if it is a side payment made by the if it is not a side payment made by the nominated bank, then those will be with recourse to the beneficiary. In case of commitments to honor or negotiate, commitments to honor or negotiate, or in many jurisdictions called as signed confirmation, where a nominated bank gives a written promise that we will pay provided documents are complying, or terms complying with the credit are evidenced in the documents submitted. Then this silent confirmation or commitments to negotiate is not covered by Article 8. Article 8 talks about the confirmation and confirming bank, their liabilities, responsibilities, and rights. Now, the rights of a confirming bank does not pass on to a bank that issues a commitments to negotiate. And though they agreed to act as per them, just like a confirming bank, by adding their silent confirmation, their duties or rights or responsibilities are not covered by Article 8 of the UCP. And they will be asking for such a nominated bank will ask for assignment of proceeds by the beneficiary to cover them, because the Article 12 or Article 8 related benefits does not flow to such bank. What are the different ways and means in which financing is done under a credit, a short-term finance, or a suppliers and buyers credit finance? The normal or the usual method of financing is advancing funds by means of negotiation. What is this advancing funds by negotiation? The documents are found complying, and the nominated bank pays their own funds to the beneficiary and wait for the date till a reimbursement is received from the issuing or confirming bank. So advancing funds prior to the date on which the nominated bank will get reimbursed is called negotiation. It is one form of financing where beneficiary will get funds in advance and well before the applicant or the issuing bank is willing and ready to pay up. Another is discounting and purchase. Discounting and purchase happens normally for a draft or a deferred payment situation, where payment is made after such reduction of interest and charges to the beneficiary. The main thing that is done in these situations is to check the authenticity of the acceptance. If an acceptance is received from the issuing bank, whether it has come by SWIFT, and whether they have agreed to pay on due date, and whether it is unconditional, that is what we will check. In case a draft is drawn, we will not be verifying the capacity to accept the draft, but we will be verifying whether it has been properly accepted. So the sign, the seal, the date, those things will be checked, but we will not check whether the signatory has a mandate to sign and accept such drafts or not. That will not be verified with the banks. The UCP Article 13 sorry, 12, UCP Article 12 gives a little bit more clarification on the aspect that an authorization for a nominated bank to purchase or prepay their acceptance or the deferred payment undertaking. Now, it says if a bank is authorized to undertake a deferred payment undertaking, or if a bank is authorized to accept a draft by the issuing bank, when the issuing bank gives such a nomination or such an authorization, it is automatically also an authorization to purchase or prepay their acceptance or deferred payment undertaking. Now, this means if a draft has been drawn on the nominated bank, or a deferred payment undertaking has been presented, LC under deferred payment undertaking has been presented to the nominated bank, and they are not expressed their refusal to act as per a nomination, and so the beneficiary had presented the documents under such a documentary credit, the issuing bank may undertake a deferred payment undertaking or accept the drafts, and then that issuing bank who had undertaken a deferred payment undertaking, or who had accepted such drafts drawn on them, have a right to purchase or prepay such a transaction. So when a nominated bank honors by accepting or undertaking to pay on a deferred date, they can purchase or prepay such an undertaking or acceptance, and this is automatically authorized. This clause has come because of some legal tangles that we had in earlier situation, where a deferred payment undertaking was purchased by a bank but was not reimbursed on due date, and it was argued that the issuing bank had not explicitly authorized them to prepay a deferred payment undertaking. The deferred payment undertaking by the issuing bank was that they will pay on due date, and there was no authorization for reimbursement. Because of that, this clause has been introduced in UCP, which says that authorization to a nominated bank is also an authorization to purchase or prepay. So this is regarding the settlements, and we have one small concept on claims by the named nominated bank, how the reimbursing bank will act and things like that. Nominated bank may debit the account of the issuing bank and effect the payment if they have an nostro-vostro relationship, if located in the same country and maintains the same currency accounts. If the credit is in US dollar, if both the countries are say in Afghanistan, then the bank can debit and credit each other's account, because most of them will have account with each other because they are in the same currency and same country. If the credit is not in Afghanistan currency but in a currency of a neighboring country, then they may not have accounts in the same currency. So what will happen? The nominated bank's claim will indicate the details where the payment should be remitted. Suppose the claim is in GBP, then the nominated bank, Bank A, will say, please remit your funds, or ask your GBP correspondent in London to credit my account XYZ with Bank ABC in London. So they may have account with the same bank in London, or they may have different banks who are having the accounts of these two, bank A and B, and so they will ask the funds to be settled in London in GBP if the credit is in GBP. Now, it could be a situation where the parties are in two different banks, two different countries, and two different currencies. In such a case, the documentary credits will indicate a reimbursing bank where the currency of the credit is different from the currency of both issuing and nominated banks. A bank in India and a bank in China may do a US dollar transaction, neither an Indian rupee nor a Chinese yuan, but a US dollar transaction, and so there will be a reimbursing bank at New York for a US dollar transaction. And in New York, the Chinese bank and the Indian bank need not have the account with the same bank in New York. It may have accounts with different banks in New York, and then the documentary credit will say Bank of New York is the reimbursing bank, and the claiming bank will say Bank of New York, please reimburse me for a credit issued by the Chinese bank, and please pay my account with HSBC New York, or Bank of America New York, or Deutsche Bank New York, or any other bank. So when the currency and country of the issuing and nominated bank are totally different, we will have a separate independent reimbursing bank at the country where the currency headquarters of the credit is there. If the currency is different but the country is same, we may have a situation that we will ask the bank to remit or credit our account with the nostro center. If it is a GBP transaction, both done within, say, within India or within Afghanistan or within Pakistan, then we may say, please credit our account at for a GBP transaction with Bank of in London. Maybe we will pay HSBC London has to be credited. And if it is both are Indian currencies and both the banks are in India, we will debit or credit each other's account, because most of the time we will have their accounts, or sometimes we may ask to remit also. So these are the ways in which the nominated bank will claim money and get paid the money is due under the documentary credit. The expectation or the requirement of the nominated bank is the payment in good value And in case there is a delay, the cost of delay will be borne or has to be borne by the issuing bank under the UCP terms for a documentary credit transaction. If there are claims by the confirming bank, same as a nominated bank, the rules will apply. Only thing is they may request for more stringent conditions with regards to reimbursement. The confirming bank will ask the issuing bank to give more stronger promise for reimbursement because their payments will be without recourse, and so they want to make sure as much as possible watertight that they will get their money back. So how they do it? They may ask for reimbursement undertaking from the reimbursing bank, IRU, irrevocable reimbursement undertaking, IRU, from a reimbursing bank, or some other uh, promises in addition to that given under the UCP articles for a documentary credit issued by the issuing bank. Payment to the date of its receipt of the reimbursement as it pays without recourse. Now, the reimbursement bank is worried because if they do not receive the funds from the issuing bank on the same value date as the day they pay the nominated bank, then they are in trouble because their payment is without recourse, so they cannot get back to any other party for value dating, backdating, or related cost or reimbursements. In case if it is a freely available credit, what's a freely available credit? Credit available with any bank, not a specific nominated bank. Then also it means that it can be claimed by any bank. Neither the reimbursing bank nor the issuing bank is aware claim will come from whom. And because the issuing bank is not aware who will claim, the concepts of debit my account, credit your account, debit my account will not apply, but credit your account will apply because any bank can ask, please credit my account with you. Mostly do not have any ability to debit the account because the specific nomination of a specific bank is mostly because of the account relationship and a correspondent bank relationship. But when it is any bank, the nostro-vostro relationship may also not be there in place. Issuing bank is required to reimburse the nominated bank. Issuing bank is required to honor a presentation made directly to it. So this is required under the issuing bank liabilities. Now, authorization. The authorization to pay a claim, that is reimbursement authorization, the reimbursement claim and the payments will be made by authenticated teletransmission to the extent possible. So we will be using SWIFT message by the issuing bank to the reimbursing bank to authorize, SWIFT message from the nominated bank to the reimbursing bank to claim, and a SWIFT message from the reimbursing bank to the claiming bank and issuing bank to say you have been paid or your account has been debited for making claim under your DC. Now, we use SWIFT because of the accuracy, reliability, and the availability of standard fields and formats. So it is very popular and it is used because of the accuracy, reliability, and the standardization of the fields and formats so that uniform understanding and the basic requirements are met by the mandatory field restrictions in the SWIFT. What are the message types that we use? MT740 is used for as a reimbursement authorization, 747 for amendments to reimbursement authorization. 742 is sent by the paying or negotiating bank to the bank that is authorized to reimburse. That is a reimbursing bank for making a claim. 754, what is this? This is a message from the negotiating bank to the paying bank saying we have paid, we have accepted, we have negotiated, and this is ultimately falling due on this particular date. What is 756? Advice of reimbursement. This says whatever you have paid or accepted, we have taken up and we further agree that you will be reimbursed or you will be paid on a particular value date. So 756 is mostly sent by the issuing bank to the nominated bank, and 754 is normally sent by the nominated bank to the issuing bank. What are the basic arrangements required? Now, the reimbursement can be made available subject to uniform rules for bank-to-bank reimbursement. Now, if the reimbursement is subject to 725, then the credit has to say reimbursement is subject to 725 and it has very detailed rules. If it is not subject to 725, then Article 13 says what are the things that has to be taken care and what are the terms that are applicable to a documentary credit unless the credit has something more specific to state explicitly. Now, credit and the reimbursement authorization has to indicate it is subjected to URR or not. If it says it is not subject to URR, or if it does not say it is subject to URR, then Article 13 will be applicable. And the issuing bank is responsible for issuance of a reimbursement authorization. The acceptance of reimbursement authorization or refusal is the right of the reimbursing bank, whether they are willing to act or not. If they are not willing to act, they have to inform both the issuing bank as well as the nominated bank that they are not acting as a reimbursing bank. In such a cases, the DC will have to be amended and the issuing bank will have to give another reimbursing authorization to another bank and then inform the claiming bank or the nominated bank accordingly. The amendments to reimbursement authorization may or may not be accepted by the reimbursing bank A, and B, they may not also agree to accept such amendments until and unless in case there is a reimbursement undertaking, that undertaking is amended and the nominated bank is willing to accept such amendments to the reimbursement undertaking, if any, because reimbursement undertakings are irrevocable, but reimbursement authorizations can be revocable. Reimbursement authorizations does not have an expiry date, and if the issuing bank wants, they have to explicitly cancel the RA in case the DC had expired unutilized. If there is a request for irreversible reimbursement undertaking, then there are multiple concepts to be looked into, which are discussed in detail when we talk about the uniform rules for bank-to-bank reimbursements. The amendments to reimbursement authorization will be effective only if the parties are willing to agree and act upon it and accept it. So, amendment to reimbursement authorization will have to be accepted both by the nominated bank as well as the reimbursing bank. And in case if there is an RU, further the RU needs to be amended and accepted. So we come to the end of this session on settlements. Thanks for watching this video and please keep coming back.